Welcome to The Explainer. So, JP Morgan Chase, America's biggest bank, just dropped its latest quarterly results. And frankly, they've got Wall Street talking. The profits are absolutely massive, but the warnings, they're pretty grim. So what is really going on inside this financial fortress?
Right. So on the one hand, you have these incredible blockbuster numbers, but when you start to listen to what the top brass is saying, you get a completely different picture. To figure this out, we're going to have to dig in, look at what's working so well, and then pinpoint exactly where the cracks are starting to show.
Okay, first things first, let's just take a moment to appreciate the headline numbers, because honestly, they are seriously impressive. Get this. JP Morgan pulled in a staggering $14.4 billion in pure profit for the third quarter. Just to put that into perspective for you, that is an insane amount of money. It also completely blew past what Wall Street was expecting, which is never easy to do. And where did that profit come from? Well, it was fueled by revenues of $47.1 billion. That's up a very healthy 9% from last year, which tells you the bank's main money-making machines are just humming along. Now, this number here, this 20%, this is what really shows how efficient they are. It's their return on tangible common equity. All that really means is for every dollar of shareholder cash they have, they're making 20 cents in profit. For a bank this size, that is a super strong return. But right when the champagne corks should be popping, the CEO, Jamie Dimon, comes out with this. And it just perfectly captures the whole puzzle, doesn't it? The bank is doing great right now, but they're seeing something on the horizon. This tension is the key to the whole story. So let's pop the hood and see what's driving this thing. We're going to start with the first of two massive engines, the commercial and investment bank. You know, this is the side of the bank that deals with huge corporations, governments, the big players. And wow, was this engine a powerhouse. It was responsible for almost half of the bank's entire profit this quarter, bringing in a massive $6.9 billion all on its own. What's really interesting is how they did it. The money is split almost perfectly down the middle. You've got the banking and payments side, which is all about advising companies and moving money around. And then you have the markets division, which is the high-octane world of sales and trading. And you can see here both sides are just on fire. Fees from advising on big deals are way up, and the trading business is booming, especially in equities, which saw a mind-blowing 33% jump. That's just incredible. And according to one of the bank's top execs, companies are finally back in the game, making huge deals. He even said the animal spirits are back in the market. So yeah, this part of the bank, absolutely crushing it. Okay, now let's shift gears to the second engine powering JP Morgan, the average American consumer. This is the Main Street part of the bank, and it is every bit as important to keeping that fortress strong. The consumer banking division pulled in a very solid $5 billion in profit. That tells you their retail business, checking, savings, credit cards, is doing really, really well. And the data really backs this up. People are spending more on their credit and debit cards. More of us are using the mobile app. And we're trusting the bank with more of our investment money. These are all signs of a really confident, financially healthy customer base. And this is so important because it means the very foundation of the bank seems solid. The CFO himself said that based on their own internal data, the average customer is doing fine, maybe even a little better than they expected. Okay, so if the investment bank is roaring and the consumer is strong, then why on earth are we hearing these grim warnings? Well, this is where the story takes a twist, and we start to see those cracks in the fortress. And this is the quote that really sent a chill down Wall Street's spine. Jamie Dimon used this really stark analogy to talk about some credit problems they're seeing. The implication is terrifying. What if this one small problem is just a sign of a much bigger infestation? And here's what that looks like in dollars and cents. The bank is setting aside $3.4 billion just to cover potential losses from loans that might go bad in the future. You don't put that much cash aside unless you think a storm is brewing. And that huge provision was triggered by this number, $2.6 billion in actual loan losses for the quarter. These are what they call net charge-offs. It's important to know the difference. The first number is for what might happen. This one is for loans that have already gone bad. So, just to be crystal clear, a charge-off is basically the bank giving up on a loan. They've decided they're probably never going to get that money back, so they write it off as a loss. It's a very real crack in the fortress wall. So you have to ask, what caused this spike in bad loans? Well, according to the bank, it's not because the whole economy is slowing down. It's something much more specific and, frankly, a bit more sinister. They're pointing to apparent fraud. And this is the cockroach that has Jamie Dimon so spooked.
All of this brings us to our final view from the top of that fortress. And when you look out, well, the future looks pretty murky. One of the bank's leaders put it perfectly, calling it a fog of uncertainty. Between geopolitics, new regulations, and just general confusion about where the economy is headed, it's getting really hard for anyone to see clearly. And you can see that caution baked right into their official forecast. Sure, they think income will hold steady, which is good, but they're also warning that expenses could run higher than people think. That's a clear signal they're batting down the hatches for a tougher environment ahead.
So that leaves us with a big, multi-billion-dollar question. Is JP Morgan the impenetrable fortress that its record profits suggest? Or are these cockroaches and this fog a sign that the walls might not be as strong as they look? Only time is going to tell, but you can be sure the entire financial world will be watching.